Welcome back to my channel. Hi if you're new. In today's video, I'm going to be covering 3 different types of business structures in Canada if you are someone who is considering starting a business in Canada. Hopefully this will help you decide which option is best for you, and I'm going to give you a little bit of insight into how you can go ahead and get started with whichever type of business you choose. The source for all of the information I share in this video will be linked in the description box below, so be sure to check those out. I'm not an accountant, I'm not a lawyer, I just share what I know from running my own business here in Canada over the course of the past 5 years. With that being said, if you are someone who's interested in learning how to start or grow a business in Canada, be sure to subscribe to my channel. I post new videos every week. And without further ado, let's go ahead and jump right in. Okay, so first up, let's jump right in and talk about sole proprietorships. A sole proprietorship is a business with only one owner. Essentially, it's a person who is self-employed, assumes all business operations and all business liabilities. It's the easiest to open and the easiest to operate. This is the simplest business structure to start, and in every province in Canada and territory, with the exception of Newfoundland, you are required to register within the province that you live in, assuming that you're operating under a business name that is not your legal name. So for example, when I lived in Ontario, I used to own a yoga studio called Lifestyle by Design Studio. That in itself was a registered business with the province of Ontario. Meanwhile, I was also doing content creation like this as Danielle Ryan. That was not a registered business. It was still a sole proprietorship, but I essentially operated 2 sole proprietorships, one that was registered and one that was not. If you're just operating as an independent contractor under your legal name, you are not required to register in the province that you live. However, that being said, any deviation from your legal name requires registration. So if I were to open a photography business and call it Danielle Ryan Photography, I would have to register that because I have now deviated from my legal name. Confusing, I know. If you have questions, let me know. I also have my free small business checklist linked in the description of this episode, and that will walk you through this a little bit more clearly, and it includes the links to the websites where you can go ahead and register your business if you're interested. So when it comes to sole proprietorships, there's a few things you want to keep in mind. First is that you are self-employed, which means you are assuming all of the debt, all of the liabilities, and all of the assets related to the business. You are personally tied to the business. And so the best way that I usually describe it is that as a sole proprietor, you and your business are the same thing. You are the business. You can still hire employees, freelancers, subcontractors. At the end of the day, though, you are the one that's responsible for those people. And because you are the business, any expenses that are incurred as part of the business operation are actually put against your personal income. So essentially, when you file taxes at the end of the year, any taxes that the business owes are actually owed by you. Sole proprietors in Canada will file their taxes using a T2125, which you can see on the screen here. It's essentially just a T4 for people who are self-employed. Always talk to a bookkeeper and accountant to make sure that you are doing what's right for you. The last thing I will say about sole proprietorships is that it can be difficult to secure funding if you are getting into a business where you're hoping to be able to apply for government grants. A lot of people want those incorporated businesses, so just keep that in mind. Okay, next up we have partnerships, which is actually quite similar to a sole proprietorship in terms of its structure and the liabilities associated with it. The only difference is that you have at least 2 or more people running the business. So this means that the business's profits, the business's losses, assets, debts, liabilities are all divided equally or divided amongst the partners in whatever percentage you decide. So again, it's created jointly by more than one party, and all of those parties are jointly then liable for anything that happens within the business. Just like how a sole proprietorship, you are tied to the business, you are the business. Same goes with a partnership. You and your partners are all tied directly to the business. And again, this means you can still hire employees, freelancers, etc. You as a collective are now just all responsible for that individual. And from a tax perspective, just like in a sole proprietorship, all of the income and expenses incurred by the business are now the responsibility of all of the partners to make sure that they get paid. And last thing, just like a sole proprietorship, it can be difficult to secure funding if you are in a partnership. Okay, last up we have a corporation, which is a legally separate entity that has its own debts, its own assets, its own liabilities. And so obviously, in order to set up a corporation, there is more paperwork involved. It's not as simple as a sole proprietorship or a partnership where you can just sign in online and have it in 5 minutes. It is a much more formally structured entity. And that being said, it is more costly to set up a corporation than it is to apply for a master business license as a sole proprietor or a partner. One of the key benefits of a corporation, though, is that you as the individual, as the owner, are now separate from the business, meaning that you are protected, your personal assets are protected in the event that you're in a situation where you were to get sued. Your personal assets are no longer at risk and you are not liable. The business is liable for those debts, those errors, those issues, if you will. And so as a corporation, you will have a separate payroll, separate tax structure. You now become an employee of the business versus actually being the business. And so all of the money that the business brings in is no longer put against your personal taxes. Yes, the business is responsible for paying taxes, but you as the individual are only responsible to pay taxes just like you would at a job on the money that you get paid from the corporation. Again, if incorporating is something you are considering, it's really important that you speak to a tax professional. They will be better able to explain it to you versus me, who's just a stranger on the internet, and they can probably also advise you on whether or not it is the right choice for you. All that being said, if we come back to this argument about funding, it can be a lot easier to find funding if you are a corporation, just because many government grants, programs, etc. are looking for a corporation, probably because of the liability involved, but just something to consider if that is a route you want to pursue. So one very common question that I get over on TikTok is actually whether or not I should incorporate my business. Now, not me, you. People are asking me, Danielle, should I incorporate my business? Now, the answer here can be quite complex, but for the purpose of this video, I'm just going to focus on the differences between sole proprietor and corporation. Generally speaking, there are a few rules of thumb that I like to follow. Again, this is not legal advice. This is just my opinion when it comes to deciding whether or not it's time to move from a sole proprietorship into a corporation. And if you are someone who is well versed in this topic, you can feel free to add your insight in the comment section below. First things first, if you have the intention to grow your business beyond what you personally as an individual are going to need. Generally speaking, anyone generating well over 6 figures in their business is going to benefit from incorporating simply from a taxation perspective. Because as a sole proprietor, any income you have is considered personal income and therefore you are taxed as an individual. When you have a corporation, you become an employee of that business. Therefore, you aren't taxed at the same bracket. And corporate taxes just work completely differently. This is why it's so important to talk to a tax professional when it comes to you and your business. But if it was me and I was making well over 6 figures, I would be incorporating my business. Again, just my opinion. Second, if you're operating a business that intends to hire multiple employees, it might be in your best interest to incorporate. Yes, as a sole proprietor, you can have employees on payroll, but ultimately at the end of the day, you are fully liable for those employees and making sure that they get paid. So not to say that we start a business without the intention of paying our employees, but things happen. Sometimes things can go south. And you don't want to be held personally liable because, again, remember, all of your personal assets are at risk. If you are a sole proprietorship, all of a sudden business goes south, you can't afford to pay your employees. What's going to happen? So as a protection of yourself, it might be beneficial to incorporate in that case. Third, if you intend to try and get money from VCs, government grants, government programs, it might be easier for you to be able to do so if your business is incorporated. In fact, many of these funding opportunities actually require that you are incorporated, that you are a corporation, in order to even afford you the opportunity to be able to apply for the funding. Fourth, and arguably most importantly, if you are getting into a business that has some degree of danger or personal risk, it is probably in your best interest to incorporate that business. For example, I often cite things that go on or in the body. So maybe it's skincare, maybe it's cosmetics, maybe it's food related things. Anything where someone's going to be, eating something or putting it on their skin and they could have an adverse reaction. You really want to make sure that you and your personal assets are fully protected in those circumstances. Because the last thing you want is to be liable for a lawsuit when someone has a bad experience. And another one that someone pointed out on one of my TikTok lives is like candle businesses, because the risk for setting someone's house on fire and then them coming back and trying to sue you could be huge. And that is also why it's important to make sure you have insurance for your business, which I could do an entirely different video about, but just something to keep in mind. Again, always talk to a professional like a lawyer to see what makes sense for you and your business. And this all being said, a lot of us can get by as sole proprietors. I've been a sole proprietor for 5 years so far, no problems. Please don't sue me. There's no need to overcomplicate things if it's working for you and you are in a position where you're not at risk of being sued. As always, if you have questions, feel free to put them in the comments below. I am happy to help you as best I can. Be sure to give this video a thumbs up if you enjoyed. Subscribe to my channel. I put out new videos every week. And you can follow me over on Instagram and TikTok for daily small business tips. Next video will be coming up right here, and I will see you in my next one.